Hi, good afternoon. For those who are tuning in, welcome to ProStock. This ProStock is the social corporate responsibility of Buildy, the platform for everyone who builds. Today, we're very excited. We have a very, very special guest, Sir David Leechiu. Hi, sir. Good afternoon.
Good afternoon, and thank you very much for having me over, Natalie.
All right, and we will also be joined by by one of the co-founders of Buildy, Mr. Stuart Lim. Hi, Stu.
Hello, Stuart. Thank you very much for having me also. It's a pleasure.
All right. So, Sir David, just really quickly, I'm pretty sure people who are working in the central business districts in Metro Manila would see always the surname Leechiu Property Consultants, and it's all over. So, but just for those that are just tuning in and might not be aware, sir, can you quickly just give us an introduction of your company, sir?
Yes. So our basic platform is that we are a brokerage business. We are a real estate brokerage business, and we happen to be the largest in the Philippines by revenue, not by headcount, but by revenue and by number of clients. And we have the most seasoned brokers in the Philippines. And the team has done some of the largest transactions in the Philippines in both the sales side and leasing side. And we do business all over the Philippines. We have a very strong market share, a disproportionate share of the BPO sector. And because of that experience, I sit on the board of the BPO Association, and I've been there for, I think, 4 terms now, so going 8 years. And we also have a research and consulting business and a valuation property appraisal business. I also, on a personal capacity, am a co-founder and shareholder of the W Group, and we have 5 buildings in BGC and a 6th one in the pipeline. The 5 buildings make us the 2nd or 3rd largest owner of office space in BGC, spanning about close to 200,000 square meters.
Sure, that's very interesting, and I think for our next topic, we will be talking about a lot of the real estate from a commercial standpoint. But for today's session, sir, we're talking about residential. So, what is your real estate outlook for the residential space?
So, from a macro perspective, the Philippines has been through a 20-year boom since it started in the very, very early 2000s, and it was buried by a lot of the political circus that was going on during that time. And that's why people didn't notice it, but it actually started there as early as then. And over the last 20 years, we were able to fix a lot of the country's problems, so much so that the per capita income doubled in the Philippines in the last 20 years. That doubling of per capita income produced new wealth. That new wealth created demand for real estate. And that is the only reason why you see so much construction all over the Philippines. In fact, the Philippines is one of the most, I would say, one of the fastest developing countries in the world because of the amount of real estate they are building. And in the residential space, we have built about 20 million square meters in Metro Manila alone. And half that number was built in the 60s to the 90s. But the other half of that number got built just in the last 10 years. And we are building another 8 million square meters in the next 6 years alone. And that's why if you look at and despite the massive injection of supply, it sounds big, no? But actually, that's barely meeting the demand for the 12 million people that reside in Greater Manila. And if you look at the last 10, 15 years, the compounded annual growth rate of many projects is between 6% a year to about 20% a year, every year for the last 10 to 15 years. Whether it's a condo project or a piece of land or a house and lot, the compounded annual growth rates have been a low of 6, a high of 21% per year.
All right. And sir, even though, again, we're operating in a post-pandemic situation, are you still optimistic about, the residential realty market?
Definitely. I mean, because of the fast appreciation of assets in the country, the pandemic successfully slowed down this appreciation of assets. So different sectors got hit differently by this crisis. For example, the tourism market got choked. The retail and mall market got choked. But the residential low, middle end and low end markets have been choked for the first year of this crisis, but they have started to pick up in volume. The foreclosures have been the highest in probably 10-15 years because of this COVID crisis, because so many people lost jobs. But they are predominantly in the lower end of the market, predominantly. And the middle, upper middle, high end, and luxury markets have continued to increase in volume. So it dipped in the second quarter of 2020, but since the third quarter of 2020 up to today, many sectors in the residential segment of the market have been climbing in volumes of transactions. It is still not near what we had in 2019, but this uptrend of volume for the last, I would say, 15 months is a definite sure sign of a recovery. And I encourage many investors to take advantage of this pandemic, the slowdown of the appreciation of prices, to be able to pick up assets for relatively cheaper prices. Because when we overcome COVID, and we are doing that rapidly, the appreciation of prices will be faster than the last because of the revenge investing and because of the renewed confidence in the Philippines. And so I'm quite optimistic about the next 20 years because this administration has initiated so many reforms. People don't talk about it now because it's lost in the mudslinging activities as we go closer to election, and that's true for any government anywhere around the world. But the facts remain that this government has done a great job in making structural reforms that will create more wealth for the Filipino, not just for the 1%, but for everybody. And that will just translate to more demand for real estate, especially in the residential sector. And this isn't just about a Manila story, it is happening all over the Philippines. So people don't know that we built 50 townships all over Metro Manila. We have consumed all of that. There is very few developable land in Metro Manila. But we also have built 130 townships all over the Philippines, from as far north as Ilocos Norte to as far south as Sarangani and General Santos and Zamboanga. So this is really literally changing the landscape of the country, small barrio barangay to big cities all over the Philippines.
Thank you, sir. And I think you mentioned earlier that you've been sitting on the board of IBPAP for some time. And I think one sector, although impacted by the pandemic, but remain bullish and strong is actually the BPO sector in the Philippines. Is this part of the segment that you refer to as your, perhaps the ones that are in need of this residential real estate and they have the ability to actually sustain?
Definitely. The reason why the BPO industry continues to grow at the thick of this crisis, I mean, even through the hardest of lockdowns, companies, mainly the BPO sector, continue to take space. Why? Because every time there is a global crisis, the first thing that many Western companies do is offshore to India and to the Philippines. And therefore, it excites me every time there's a global crisis. And that's why the BPO sector insulates us from the global crisis. So as many countries get ravaged economically, the damage to the Philippines could be worse, but it is not, because we are partially insulated by the BPO sector. The other sector that insulates us is the overseas remittances. So the overseas remittances continue to remit $35 billion last year, this year, despite what everyone says, World Bank, Asian Development Bank, IMF, etc., JP Morgan, HSBC, all of these people said, oh, the Philippines is in big trouble because this COVID is going to reduce remittances significantly. And you know what happened? It was up. In 2020, it was up by 5%, something like that. And every year that passes, the overseas Filipinos are remitting more funds. Why? Not because they want to give more money to their relatives who constantly ask for financial help from them, because for those kinds of people, they're hiding from those relatives. You know, they are investing real money into the Philippines now. We service many Filipinos, very successful Filipinos, who are either ethnically Filipino but not born here, or they left the Philippines when they were very young, like 2, 3, 5, 7 years old. They became very successful in Canada or US or Australia or wherever. And they say, wow, the Philippines is offering so much and we love it. And so they're buying real estate here speculatively for rent, but they're also building businesses here. So we have, you know, dental practitioners in the supply chain of the dental industry in the West who set up BPO operations here, that set up clinics here to be the back office clinic of their frontline office in Canada or US. They are setting up BPOs here. They're setting up data mining centers, data analytics centers, data processing centers, customer service. And these are not big operations like Sutherland or Teleperformance or Teletech. These are entrepreneurs from the West who are ethnically Filipino that are setting up anywhere from as small as 10 employees to as much as 200 employees. For an entrepreneurial business, that's pretty significant. And there's so many of that happening. They're just so under the radar, people don't notice them. And more of that is coming. And so besides the wealthy Filipinos reinvesting in the Philippines, and what drives them to do that? Because they see it happen. And besides this segment of the overseas Filipino is the retirees. Mm-hmm. A lot of people are saying, man, I can't stand the cold in Chicago anymore. I can't stand the cold in the Netherlands anymore. And so they buy a home inaccessible to all their relatives. It's a secret home that they have here, far away from all these people. And they are here a few months in a year when it's too cold in the West. And when it gets too hot, or if the mosquitoes are become unbearable, or if the relatives find out they're here, then they fly off somewhere else. So these two segments of the overseas Filipino market is what's going to drive the next 20 years. Why? Because they see the massive change. 20 years ago, I was in a plane, and beside me was this overseas Filipino who's never been to the Philippines in 25 years. And when we were approaching the landing, he looked out the window and he said, he cursed. And I can't say what curse it was because it's like, PG. And he lamented and he said, man, the Philippines hasn't changed. Because as soon as you land, what greets you in the skyline? All these rusted bubong ng mga squatter, whatever, all around the iya, right? Mm-hmm. Now, nobody says that anymore. It's like, oh my God, what are all these glittering glass structures as we landed? And then, of course, that experience is then ruined by NAIA and ruined by the traffic. But that's changing again because all these ramps, skyways, and new bridges and new tollways are bringing new and fresh energy into the Philippines. And so what many people don't realize also is that for the last 24 months and the next 24 months, this period of more or less 5 years is the golden age of infrastructure for Philippines because this is the single biggest injection of infrastructure the Philippines has ever seen since the 50s. Mm-hmm. Okay? And all that is just going to translate to better investor confidence for Philippines. And again, the overseas Filipinos and the BPOs drive that. And as the country improves, more BPOs will come. The ones that are here will then start expanding in the provinces as we have led them to the provinces. And we brought the first locators to Iloilo, the first locators to Cebu, the first locators to Bacolod, the first locators to Puerto Princesa, to Ilocos Norte, and I look forward to bringing more everywhere in the Philippines. It's awesome, and once they're there, they energize the community. When we first brought the first BPO to Dumaguete, Dumaguete was a sleepy town. And what is it famous for? For being so close to Apo Reef, therefore the diving. But second, the Sylvanias. And they were so proud that their first McDonald's or Jollibee. The first Jollibee was about to open. The first branch. Hey, here we have our first Jollibee and our first internet cafe.
Yes.
And now, my God, there's so many internet cafes, so many fast food chains. The economy is so vibrant just because of what is now 2 BPOs or 4 BPOs in Dumaguete.
Right.
And yeah.
That's memorable, sir. I used to work for Teletech, so I know we're one of the first, or we were the first in Dumaguete during that time.
Yes.
Okay. I have the co-founder of Buildy with me, Stuart Lim. He has a couple questions for you, sir. Over to you, Stu.
Yeah, Sir David. Actually, for first-time investor, what do you recommend for investment? For a condo, townhouse, or a lot in the province? What would you recommend?
Okay, so as a first-time investor, please rent where you live.
Rent where you live.
Don't be so obsessed with owning your first home too soon. Unlock your assets, unlock your money from non-income generating assets, and then move that to income generating assets. Okay. So if you can afford a condo, then buy a condo. If you can afford to buy office space in BGC or Makati, then please do so. Okay. I am very, very focused on BGC, and I think that is the safest market in the Philippines for investing in real estate. And the yields might be lower, but it is also the safest and most guaranteed marketplace. So I would prioritize BGC and then Makati. I would prioritize office space and then condos. And so if you do not own real estate yet, then please do so. You rent the place you live in as cheap as you can in a safe, wholesome place. I mean, I wouldn't want you to move to some, dangerous neighborhood, right? And where your children won't feel safe. But then the money you would have invested for your own home, move that out and invest it in something that you can rent out. So that generates you cash. Why? Why do I say that? Because to quote the author of Rich Dad Poor Dad, Robert Kiyosaki, he said that your home, if you own it, is a liability. It is not an asset. What is an asset? An asset is something that generates cash for you. Your home will never generate cash unless you sell it. And you only sell it because you're smart, or because you're dead, or because you're moving out to a better home. But you only derive income from your home when you sell it. So I say, if your only asset is your home, then you either move out of your home and rent it out and live in a cheaper place, or you sell it, liquidate it, rent in a cheap place, and then invest in real estate. Better yet, whatever proceeds you have, invest in real estate plus the stock market, because the combination of those two is very powerful. And right now, people are more educated. But imagine, just 12 years ago, do you know how many individual investors were there in the Philippine stock market? Less than 200,000. In a country of 100 million people, there were less than 200,000 individual investors in the stock market in the Philippines. Because some people will have 5, 6, 7, 10 trading accounts, So if you just trace the individual, it's just 200,000. Today, there's I think it's about 2 million people investing in the stock market today. And more foreigners are coming into the Philippines, which is why the physics hit an all-time high of 9,000 a couple of years ago, or 3 years ago. And if you look at the stock market today, from the bottom during the pandemic in March of 2020, that was the bottom at 4.5. The index is at 4.5, 4.6. Today it's about 7.1, 7.2. And they're projecting it to breach 8,000 next year, late next year, whenever. But that shows you the momentum of investment. And so as a first-time investor, you're probably very young. So discard all your millennial mentality and discard social media and educate your mind, because YouTube and Google is a tremendous learning experience if you want that to be a learning experience more than just an entertainment experience. And learn how to feed your mind and invest and use money wisely, live as cheap as you can, and invest in real estate, because the capital appreciation in real estate of almost whatever kind is anywhere between a low of 6 to a high of 21% per year with doing very little.
Yeah.
Yeah.
Sir, how about foreclosure? Some are investing in foreclosure. What's your recommendation on this one?
If you have long-term money, then go buy foreclosures and experiment in foreclosures. The problem with foreclosures is that, the buyers So many people who have their assets foreclosed have the right to buy it back from the bank within a year, or I think 18 months. And then many of these foreclosures are bad real estate. Many. I'm not saying all of them are bad real estate, but they're like in bad neighborhoods, they're in secondary, tertiary locations, they're not in friendly neighborhoods, and they're probably dilapidated assets. And so next, and so sometimes, you'll get a good price for it, but those assets normally are the last to recover in a boom.
Okay.
Yeah. So some, and then what complicates these foreclosed assets, apart from the fact that the old buyer, the previous owner, has the right to buy it, and even the right to match the third-party offer.
Okay.
Right? Most of the time, the good assets that are foreclosed have a lot of problems because the guy who previously owned it says, I am so emotionally committed, psychologically attached. My soul is anchored to this asset. And you bank, you evil bank, you are foreclosing on me. I'm going to assail this asset and protect it by all these liens. I'm going to put squatters there who are under my payroll, who will leave this site on my bidding, etc. And so you, the very tenacious, matyaga, distressed buyer, investor, because you only buy distressed assets, well, you'll realize that you'll be in court for a few years fixing all these problems. And by the time you fix those problems, yes, you will have you're able to buy assets at the low. And when you fix these problems, years have passed. And by the time you're able to sell these assets, the market has moved so much already.
Okay.
So sometimes it's good not to be so smart.
Okay. Sir, my last question. How about flipping? I think other countries are into real estate flipping. How about here in the Philippines?
You only flip if you know where to park the money next. If you're going, and hopefully the next parking is in another income generating asset or capital appreciating asset. Because if you're just going to buy a yacht or a nice sports car, sayang naman. So the next thing to consider when you go flipping is that the tax friction is so big. It's really big. Real estate is one of the slowest moving assets. It's very rare that the developers wipe out an entire condominium project in weeks. Very rare. It's very rare in my 26 years of doing this brokering, it's very rare that I bring a prospect to a site and they say, yeah, let's go do it. And then in a whim or in a few minutes, a few hours, we get to close the sale. Very rare. It takes months of nurturing, weeks of fantasizing, deliberating, doing due diligence before you close the deal. And even if you close the deal, it takes you weeks, if not months, just to clear a bank loan application because, the Philippines requires, 20 different kinds of IDs just to validate who you are because, you could be a scammer, a fake. You stole this ID from somebody or whatever and all that. So it's very cumbersome. And then in addition to the painful process, you also have the liquidity because it takes weeks to close the deal.
Okay, Sir David, thank you for answering all my questions.
Thank you, Stu. And Sir David, thank you so much for your time today. For those that are watching Pros Talk and you need consultation please go to those that are really credible. So Mr. David Leechiu, just Google that, it will come out. Consult with the right people so that your hard-earned money doesn't go to waste. Again, Sir David, thank you for your time today on ProStock.
Thank you for having me, Natalie and Stu.
Thank you, Sir David.